Hello traders, my name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpara Research and Analysis, and this is Daily Analytical Report. The last one before Christmas, so let's see what is market doing before Christmas Eve. It was quite a busy week. Usually this week is calm before Christmas, but this one is alright. Well, mostly thanks to Donald Trump and Bitcoin. So not strictly Forex, but we do have some interesting developments on other markets. Let me show you the calendar. Yesterday volatility on dollar was caused by the GDP from US, which came slightly worse than expected. Today we are more or less on the same levels than before the reading, so that was just a short-term movement that did not change much for the long-term, mid-term situation. Currently, the most important news is obviously Bitcoin and carnage in Bitcoin, a huge drop in the value of Bitcoin from 19,000 to 12 or even lower, but I will show you that on the chart. As for today, in half an hour we'll have a higher volatility on cable, because we are waiting for GDP from UK. On a yearly basis, 1.5 is expected. Also, in 4.5 hours, pack of data from US, core personal consumption expenditure, price index, durable good orders, that's important, housing data. And on Monday, Christmas, markets come back on Tuesday with data from Japan. On Wednesday we have a data from housing markets from US, so it will be very quiet. Thursday not so busy as well. So next week, this week between Christmas and New Year's Eve, it's usually like the less volatile and quiet, most quiet week in the year. That being said, let us look on the charts, and we'll start with euro-dollar. On euro-dollar, well, there was a beautiful flag here, but this flag got extended to actually to a bigger flag. Overnight we had a massive drop and a fast reversal here. As I said, currently we are on the levels more or less the same as before the reading. I said that the situation does not change much, but actually, well, it does not change much, meaning that we still do have like a buy signal here. We still do have a positive sentiment. Because the price is still above this horizontal support here, the price defended the neckline, the price is still in the flag, and this V-shaped reversal can be a nice candlestick on a daily chart, which this can result with a hammer candlestick. So sentiment on euro-dollar, even despite the drop from yesterday, stays positive. Next one is DAX. DAX, which is hurt, which is wounded after this false breakout above the horizontal resistance on 13,190 points. That will be the closest resistance. Current sentiment is creating a bearish situation here with a potential target here on 12,900 points. Next one, the American dollar to Swiss franc. Here we had an interesting occasion, few, let's say, weeks, days ago. It's all gone now. There's like no more good technical setup. If I had to trade right now, I would buy dollar against Swiss franc. This looks like kind of a better opportunity for me. Especially that we are above the horizontal support here on 0.9835. Like that, it's like much wider area. Starting from here, yeah, that's much better. As long as we stay above the green area, sentiment on American dollar to Swiss franc remains positive. And FTSE is doing what was highly expected from this index. So what do we have here is an ascending triangle pattern with a horizontal resistance and a dynamic support. Here dynamic support, horizontal resistance. We are waiting for the price to break this horizontal resistance and set new yearly highs. That's what this pattern do. Ascending triangle pattern in an uptrend promotes the future uptrend. That's what we are saying from the very beginning. We started to analyze FTSE recently here at the beginning of December, and we are saying that we have more of a positive sentiment here. Next one is WTI. Maybe I will change the color for black. What do we have here? We have a symmetric triangle pattern starting, let's say, here. And we are waiting for the breakout. Recently we defended support, lower line of this pattern. We are now attacking the resistance. A breakout of the resistance should trigger a buy signal. Breakout of the support should trigger a sell signal. Euro to Swiss franc, that's absolutely beautiful, because after this false breakout, we do have a typical movement for the false breakout, so a strong movement in the opposite direction. We do have a nice upswing here, the price is advancing higher. And that's what the sentiment is now. Even despite the fact that we touched this resistance, which connects higher highs since the end of October, even despite that, the sentiment is positive. S&P 500 created this flag, broke the upper line of the flag, defended this as a support, and the price goes higher. That's typical for S&P 500, no surprise here. We shouldn't be surprised with this price movements. So sentiment stays positive on this instrument. Next one, Canadian dollar to Swiss franc. It was worth waiting when the price was inside this pattern. Because current situation promotes an upswing and actually can create a nice buying opportunity. So the buy signal on this instrument will be created once the price will break the upper line of the flag. Once we will close the daily candlestick above the upper line of the flag, we will have a buy signal. American dollar to Canadian dollar, what we do have here is a sideways trend. So we touched horizontal resistance here. We touched that on 19th of December. And after that, the price is going lower. Price is dropping. The potential target for this movement is here. So it's like 40 pips, which makes it a decent short-term, mid-term sell signal. I'm not going for this because I'm not trading inside of the sideways trend, inside of the technical patterns. I rather wait for the breakout because I'm a trend follower. So I'm not the fan of such setups. Euro to British pound is doing what was expected. Look at that. We stated yesterday that we should have a drop here and a test of the recent support as a closest recent resistance as the closest support, this orange area. So first stage is done. Now we're waiting for the second stage, so a bounce from this level. First contact with the support was right, because the price draw a long tail. So it looks promising, but for a buy signal, I would prefer the price breaking this downtrend line. So for the proper buy signal, I would prefer the price to be here. Then buying a bounce here. So price closing an H4 candle above the purple line will be for me a decent buy signal. Next one is British pound to American dollar, which has a very nice setup. Probably it won't be triggered today. Oh, but maybe in half an hour. Yeah, why not? If we have a great GDP from the British pound, we may be experiencing a nice buying opportunity here. Why? First of all, look at the black line. That's a long-term uptrend line, which connects recent higher lows, and the price is climbing higher. And most recently, the price created a wedge formation. Wedge is aiming the lower line of this, the uptrend line. We also do have a horizontal support. As you can see, the price stopped making lower lows here. Price is making higher lows, which may be the start of a reversal. Price, I'm sorry, and not this one, but price getting here will be a very good buying opportunity. And as I said, probably it can happen after GDP. If the GDP will be much better than expected, it should cause a massive upswing on this pair. So far, too early to say, but there is a potential for a nice bullish movement. Next one is Australian dollar to Japanese yen, where we do have a continuation of this buy signal that we are talking about for a long time. For a few days actually, because the buy signal was created once the price came back above the yellow support. So that price being below the yellow support was just a false breakout. So here, price went higher, broke the midterm downtrend line, and is now heading to this line. Because, well, if we look on a weekly chart, yeah, that's our target. Now dollar index. Yesterday we told you that price being below the orange area is a good signal to go short. We got a confirmation yesterday because the price bounced from the orange area. The price is bouncing from the orange area today again. And well, as long as we stay below the resistance, the sentiment is negative. We do also have a small pennant here. Pennant in a downtrend, so pennant in a downtrend supports the further downswing. Australian dollar, it was there. Australian dollar to Canadian dollar, this one. After the price broke those two resistances, we have a major buy signal. And as you can see, now we do have a small reversal, and the price is aiming horizontal support. That's actually a great occasion to buy, but at the same time, watch out for this head and shoulder pattern. left shoulder head and right shoulder. Breakout here triggers sell signal, bounce here triggers a buy signal. So for now, wait and see. A bounce from yesterday looks optimistic, but today's situation does not. So what I would wait for with a buy signal would be like breakout here, and let me draw you that breakout of the black line, buy signal, breakout here, sell signal. We are back, I'm sorry. I hope you hear me. So yeah, breakout of the black line triggers buy signal, come back below the green support, triggers are as a sell signal. Now Bitcoin is the story of today. Oh, today actually Bitcoin is the story of this week, because that's a huge downswing, that's a huge reversal, very ugly bearish candlestick, bearish engulfing actually. We had a bullish engulfing here, which caused a nice upswing. We have a bearish engulfing here, which may be potentially very dangerous for the sellers, for the buyers. But from the very beginning, price, after making new long-term highs, first broke the short-term uptrend line, then a horizontal support here, then a horizontal support here, then a horizontal support here, and now is aiming for the mid-term uptrend line. First contact here is kind of positive for buyers, so we have a demand, but it's not like it was usually on Bitcoin, where every drop was bought by traders. So here traders are more cautious about what will happen, and I think that finally the situation when traders can go short on Bitcoin, finally it can be seen on the charts. This drop is mostly caused by traders taking profits from Bitcoin and moving to other cryptocurrencies. Litecoin, Ethereum, Ripple, Dash, etc. Bitcoin Cash, especially that Bitcoin Cash will be offered on exchanges, marketplaces. That's kind of a civil war between Bitcoin and Bitcoin Cash, because those two groups, it's not like they like each other very much, let's say like that. Kind of a civil war there, and many traders are abandoning selling their bitcoins to buy other cryptocurrencies. Is that a correction or a burst of the bubble? Well, technically that's a very negative situation here. On a weekly chart, bearish engulfing can potentially push the prices of bitcoins much lower. We'll see. So far, even this hammer on H4 does not look encouraging. But on the other hand, historically, every bigger dip, every bigger drop was bought and led us to the new all-time highs. So if we will just look on the history, we should buy. But history can be different now. Again, because of those futures on Bitcoin where you can sell, and because of the increased demand for other cryptocurrencies. Next one, New Zealand dollar to American dollar. Australian dollar to American dollar, New Zealand dollar to American dollar are very positive recently. So the price of those currencies are going higher. That's very technical setups. We do have very technical setups on both of those pairs from antipodes. So first New Zealand dollar to American dollar, where we do have this inverse head and shoulder formation, left shoulder, head, and the right shoulder. Left shoulder, head, and right shoulder. The price broke the neckline. That was also a symmetric triangle in a way. Price broke the uptrend line here, went higher, then created a flag. Flag is a trend continuation pattern, so we broke the upper line of the flag and the price went significantly higher. Went a little bit higher, and still there is a place to move higher because the next potential target is here, 0.7060. 50 pips, which still makes it a decent trading opportunity. 50 pips, maybe it's not much, but it's enough. It's enough. And that is good, very good trading opportunity, very technical. Next one, Australian dollar to American dollar. Here we wrote an analysis about that 18th on Monday. We stated that the price should continue to go up because we had a bearish breakout below the uptrend line, which was a false breakout. False breakout resulted with a strong upswing. Upswing came back above the trend line, above the flag, which was there. Broke horizontal resistances, and after that created this pennant. Pennant is a trend continuation pattern, so we were expecting the further upswing, and that's actually what happened yesterday. Buy signal got triggered. Today we do have higher highs and higher lows. Everything is ready for the price to test the blue resistance. So here, very important one. 0777, that's our target. 65 pips from now. It seems like a little bit better trading opportunity. The thing is that here on Australian dollar, stop loss, it's hard to set a close stop loss. Maybe here. Okay, 077 from here, yes. 54 pips, stop loss, let's say here, 15. Okay, fair enough. It's still good trading opportunity in terms of the risk to reward ratio. So no complaints here. It all looks decent. Euro to Japanese yen, that's super interesting because, as you know, yesterday we got a breakout of the horizontal resistance, long-term horizontal resistance. The price is now going lower, which was maybe expected because the broken resistance becomes a support. Maybe what was not expected was the depth of this drop because it went deep inside. But the thing is that nothing is lost here yet. So price can still come back, close H4 above, which will confirm a buy signal, and on daily chart we will have a nice hammer here. So closing a day above the red area will be positive and will trigger a buy signal. Actually will confirm a buy signal because buy signal was already triggered here. Probably if you bought here and your stop loss was a little bit too tight, it got activated, but now you can see a clear support here. So if you bought here, stop loss should be like 84 pips lower, which, well, 80 pips for this pair is not much. It's still right because this pair is quite volatile. Next one, American dollar to Singaporean dollar. Again, another very technical instrument. Currently we do have a pennant after quite clear support and resistance. Support, broken support became resistance. Now pennant what we should see here is a breakout of the lower line of the pennant and a movement here. Why here? Because these are lows from September 2017. So we should break the lower line here and have a nice downswing. Potential target signal will be created here, so potential target is like 35 pips, which again makes it a decent short-term, mid-term trading opportunity. You don't need longer because it's this time of the year, but not much is happening, and probably you should be quite happy with the movement for 70 pips, for 20, 30 pips, 40 pips. It's better to have those safe small movements than just random upswings and downswings. And the last instrument for today is gold. Gold is struggling with this 38.2, and the thing is that this 38.2 is the first horizontal resistance. Well, it's the first resistance, because here we broke 38.2 uptrend line and the lower line of the symmetric triangle. 38.2 is tested first, then the price can still test the lower line of the symmetric triangle and the uptrend line. But buyers are struggling with 38.2, the lower line of which was broken. Okay, it did not cause anything, so maybe we can extend it like here. And that's a good trading opportunity. Once the price will get here, you sell here, stop loss here for $4, and you can get $30 downswing because potential target will be here. So potential risk to reward ratio here is awesome, but for this you need to see a breakout of the lower line of the wedge. Now, my dear traders, I would like to thank you for attending daily analytical report, and obviously wish you all the best for Christmas, excellent family time, and excellent trading opportunities. Maybe not for Christmas, because as we said, markets are closed, markets are lazy, and obviously you shouldn't spend time in front of the computer during Christmas. But maybe after New Year. That's what we wish you. Less stress, more profits. Now a short break, half an hour break, and after that we will have a live trading session. I have 3 positions open. I have 2 positions open, 3 recently, but 1 was closed on stop profit order, euro-dollar, where I earned like 600 euros, I guess, as far as I remember. I will show you my stats, I will show you my results, I will show you my trades, I will explain how you should trade. So I hope it will be worth your time. It will be our last webinar before Christmas, so hopefully you will be able to attend it. From my side, thanks very much for today, and see you in half an hour. If you want more trading occasions and views, visit our website alpari.news and our Twitter account alpari.ra. Thanks very much and goodbye.